Hello, everybody. So this is episode 3, I think. Yeah, it's 3. In general trading, so trading from zero. And today we'll just take a look at different types of like trading styles. Or how would I say it? Just different types of trading, right? And first off, we can start off by holding period, I would say. And we can quickly just take a look at, for example, some random chart. Let's go Euro USD, but where I don't have any drawings. So let's use this. I've never used this. And pretty much, let's start with the fastest trading. So it's on the smallest time frame. Usually people use 1 minute. By the way, I forgot to say this is called scalping. So for scalping, this is really hard and really psychological. You need to have really good psychology for this. And also it's just really hard. I wouldn't advise this. And scalping is just holding a position for a couple of minutes. So it's just really fast trading. Some people even go lower, like 30 seconds or something like that. I usually see people on 1 minute. And this is just scalping, right? Just really fast trading. That's it. That's scalping. People usually just use. Okay, I will get back to this later. So scalping is number 1. We can put it text right here. Scalping. So it's fast trading 1 minute time frame. That's scalping. Then let's get into day trading. That is number 2. Day trading. That is pretty much the biggest guru word. Probably everyone heard it somewhere. Day trading. So it's pretty much holding a position for like 1 day. So still fast, or not that fast, like holding position under 1 day. And usually people trade on like 30-minute time frame or 1 hour. 1 hour, no, 1 hour is I think too big. So 30 minutes pretty much. Or maybe 15. There isn't really a specific time frame for each, but I'm just what I saw the most of the time. So 15-minute time frame. So we have scalping that is really fast. Day trading still fast, but it's slower now. And you hold position for like 1 day maximum, typically just a couple of hours. And that is day trading. You can, okay. And yeah, I was again gonna start with the other terms, but we'll get back to that later. Then we have swing trading. Also, there is something called intraday trading, but I won't go too deep into that. So let's get to swing trading. Now this is the one I'm doing and I would advise to do since it's probably the best. But obviously the best is whatever fits you, right? But I really advise doing swing trading. So holding position for more than a day. And usually I see people trade on 4-hour time frame. So with swing trading, you go on 4 hour and you hold a position for over 1 day or even more. And then we have position trading. Holding a position for multiple weeks to months. So then we have position trading. So we are holding a position for multiple weeks to months. Usually people trade on daily time frame. Daily time frame, right? So position trading is not something a retail trader should do because it takes just a lot of time. And I'm not saying swing trading doesn't, like it does take more time than scalping or day trading, but I feel like the higher time frame you go, the easier it gets, kinda. And you gotta like find. I feel like swing trading is the best, to be honest, because you are holding for quite some time, but also not that long, and also you're not really like that short of a time frame. So for me, swing trading is the best. And then let's get into like by methodology, or how do you say it? Like edge. What's your edge, right? So we have technicals only. Yeah, okay. So this is technicals is just a strategy, right? It's just something inverse fair value gap or whatever you trade, liquidity sweep or whatever, support and resistance. Sorry, I need to turn this off. Wait, give me 1 second. I'll just turn off my phone. Okay, so only using technicals, that's strategy, right? And that is really hard, to be honest, because when you're using technicals only, I feel like if you're a retail trader, you need to have a good discretion, or like how do you call it? Sorry, intuition, right? Discretion or intuition, because with mechanical strategies, what is a mechanical strategy is just there is no intuition or discretion. Intuition and discretion is a feeling, pretty much. Trade will win or lose, right? This is just intuition or discretion. You're just feeling that it's a bet. Even though it's a valid setup, you will not take it because your intuition says no, right? It's just a feeling. And with technicals only, mechanical strategies don't have this. With mechanical strategies, you take everything that's valid. And that is really hard to find an edge, because if you want to have that type of strategy, you need to be a quant, which I will get into later. I feel like this is this is really like not in order. But after the video, we will summarize it. So we will make sure that we understand everything. So we have technicals only. Under that, we have, let me do like this. So with technicals only, you need to have intuition and discretion, or otherwise it's really. I've never seen a retail trader with mechanical strategy that is profitable, to be honest. And then we have fundamental / macro trading. This is what I do alongside with swing trading. So pretty much for this, you take like rates, inflation, blah blah blah. That actually moves the markets. Markets are pricing that in every time, and you trade based off that. And I do use technicals, but only some simple, really just to enter. But I'm not technicals only. I'm more fundamental and macro trader. So let me do it like this, and then this, and then we have quant. Let's do quantitative trading. So what is this? They use mechanical strategies. But it's not like a regular retail trader mechanical strategy. They use math equations and really hard math and stuff like that. I'm not really a quant, so I can tell you exactly. but they do a lot of math stuff and other stuff to find an edge, an alpha in the market. And you cannot be a quant by yourself. It's impossible. And you actually need to go like to university and have like PhD in math if you actually want to be good at this. And if you ever find someone on social media saying they're a quant on their own, and they're just LARPing, don't believe them. LARPing. So next, yeah, we could say this: news and event trading. But I feel like this is just gambling. What I mean by this is you trade a release of a news event, for example CPI or some red folder. Like at 2:30 tomorrow, 2:30 there is core CPI. Let's say you take a long on this, right? That's just, I feel like gambling unless you have some insider info. And where is my text? Sentiment trading. This I also use, but I use sentiment to determine whether a trade is overcrowded. A sentiment is quote report, commitment of traders, and you can just go here, historical present quote data. Sorry about this. You can go on currencies and forex, major currencies, and let's look at, for example, wait, does USD work here? I feel like it wasn't working. Right here, this was a correction was due. For example, right here, right? Because there were too many long positions. Everyone was long. It was overcrowded. So you would have to wait for a correction right here, a slight correction, right? After that, you could enter, and as you can see, another trader's entered. We can pretty much see it on Australian dollar, Australian dollar. Let's do 2 years. And for example, right here, as you can see, 151,000, it was just too many, it was overcrowded, a correction was due, and as you can see, they started taking profit. So that is sentiment trading. I wouldn't use quote reports as a bullish or bearish bias, because as you can see, I would just use this if to know if a trade is overcrowded, if you understand. Okay, so what I would advise is use swing trading with fundamentals and macro, and use sentiment to determine whether a trade is overcrowded. And yeah, so I explained you intuition and discretion, just a feeling that a trade will lose or win, and you won't take every valid trade. And pretty much this is everything. I feel like I didn't explain some stuff, but I already forgot. So if you have any questions about this, because I feel like there are many questions, let's just summarize it, right? So scalping is the fastest. Day trading is like holding position under 1 day. Swing trading is holding position for multiple days. And position trading is holding for multiple weeks. So from fastest to slowest, right? Then you have technicals only. This is really difficult to be profitable with, unless you have really good intuition and discretion. And this, by the way, you cannot teach or learn. This is just something that will come over time, over experience. And then you have fundamental and macro trading, which is really good. I feel like not many, but all intuitions use this. Institutions, so like banks and hedge funds and everything. And then you have quantitative trading, which also I feel like all institutions use, but this is very difficult. This is the most difficult. You actually gotta be smart to do this. Then you have news event trading. This is gambling pretty much, and sentiment trading, which you should just use to know whether a trade is overcrowded. So if you have, I feel like there will be many questions about this, and if you have any questions, just join the Discord. It's the first link in the description, and just ask me. It's for free, so just ask me anything. It doesn't have to be about this video, but anything other or about this video. It doesn't matter. If you have any type of question, whether it's about this video or other videos, just join and ask. It's free. So yeah, and that's it for today, pretty much. I'm thinking about if I explained everything, but I feel like I did. I also have this right here. There are more specialized types, but we won't go into that, like algo trading and stuff like that. But yeah, I feel like this is everything I wanted to cover today. And as I said, if you have questions, just join Discord and ask them there or in the description, in the comments. And yeah, I'll see you all next time. Bye.